What's up, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is October 22nd, 2021. Please go ahead, click the like button on the video and subscribe to my channel if you're enjoying this content. I'll continue to make it for you. Today, we're going to go into the price action of the indices, the chop that we were seeing today, why I really did not trade today, and why I was barely even looking at the market. Before we dig into all that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. Last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. Trade your own plans. All right. Box scores for the indices. We had the S&P 500 closing down 0.1%. We had the NASDAQ QQQ, which was our biggest loser, down 0.84%. IWM small caps down 0.24%. And the Dow Jones, the former dogs of the Dow, were our best performer, only index that was positive on the day, up 0.22%. Now, what's interesting is we did get a pickup in the volatility for all of these indices. So that is definitely like, okay, let's watch that. Because, if a trend is turning from bullish to bearish, that's the first thing that you will see. So for right now, that's not really a big deal. Definitely something to keep watching out for. And then market breadth. We can see breadth was very mixed across the board. We had 64% advancers in the S&P 500, which was our best breadth. So funny enough, not the best performer, but we had the best market breadth there. Our worst breadth was in the IWM small caps at 45%. But overall, it's not like this was like a big sell-off. You could argue about half or even more than half of the stocks in the market were actually trading up on the day. So this really is like the definition of just like a choppy market day and mixed action. Let's take a look under the hood here. We'll look at our Finviz heat map. And we had Snapchat earnings out yesterday that really disappointed. And the main takeaway that I got from the earnings report, I'm no Snapchat expert by any means, was that there's changes to the rules within the iOS App Store, and those changes impacted their advertising revenue. So what I noticed today was pretty much every digital advertising company was really far down on the day. So Google was down over 3%. We had Facebook down 5%. That's huge. We had Twitter down, Match.com, all these communication services companies, even Amazon down 2.9%. So that sent some ripples throughout the market. Like if Google's down 3% and Facebook's down 5%, there's such large weights in the S&P 500 that it's going to be tough for us to have like a really, oh my gosh, this was an awesome day. That's very challenging. But we did have some other areas of the market that were picking up the slack. So financials, which I've been overweight for about a month now, those are doing really well. We had energy stocks doing well, consumer defensives. So definitely some other areas picking up the slack. Netflix was up 1.78%. We talked about yesterday in our video how I was long a Netflix trade. And I was like, hey, should I keep it on? Should I not? And I ended up rolling it out in time to a higher strike call spread. Netflix is now trading right smack dab in the middle of my call spread. I put on yesterday the 660 by 670. Expiring next week. Keep in mind that's a lotto. It's just a little roll of a trade that I had. That's why it's always good to just keep the dream alive. Keep rolling it out if you're winning that trade. So that is Netflix. Let's take a look at our sectors. So our sector map. Dun, dun, dun. We had a lot of mixed action. So ARC FinTech was down 2.44%. That was one of our biggest losers. The cannabis names, they just can't catch a break. They're down 3.2%. We had, let's take a look at some of these winners. Big winners for today. We had the Global Autos ETF was up 1.19%, very solid. Oh wow, and the financials were our big winner. So I'm long XLF calls, and I believe they're out either till May of 2022 or June of 2022. And then our blockchain assets also took a hit today. Let's take a look at our cryptos. I know everyone's probably freaking out about crypto. I saw people freaking out on Twitter. And I saw a news headline, and it was like, crypto plunges. Yeah, I'm taking a look. Of course, pullbacks, are never fun. But we really needed a pullback in Bitcoin and in Ethereum. Take a look at these key moving averages. We have our 20-day moving average trading right around 57.5K. And so we could pull back reasonably to that, and that's still an uptrend. So that's why it can be very dangerous to enter these stocks, when they're super, super extended, or these crypto assets. So yeah, Bitcoin, overall, definitely going to watch this to see what happens over the weekend. Anything can happen. But overall, I still think this is like, if we just retrace a little bit, that's really not that big of a deal to me personally. Ethereum, similar deal, down 4.2%. It's not a good look that we had this like nice bullish candle and now we're almost fully bearish, engulfing it. We'll have to see how these close for the day. Also, my goal of hitting 300 subscribers is actually going really well. We're getting more subscriber growth, more people commenting on the videos. So feel free, if you're liking this video, please click the like button, subscribe to the channel. Shoot me a comment on a stock that you're watching into the weekend. All right, let's take a look at our style factors. So what were we seeing here? We did see movement into international momentum. So yeah, these Chinese stocks, a lot of them were doing pretty well, at least in the beginning of the session. We had Minvol up 0.4% and defensives up 0.55%. So this is another bit of a yellow flag. You never want to see defensives and Minvol outperforming like this when the market is a little bit choppy. So definitely something I'm going to be keeping an eye on into next week. Seasonality, this one I just threw in here. Take a look at the seasonality. We're approaching the end of October. Seasonality really improves into year end. All right, let's take a look. We'll check out the headline indices, see where we are. S&P 500. What's very interesting about this candle is you can see we tagged the prior all-time high. The red line is the prior highs. We ended up putting in a doji candle for the S&P 500, so not that bad. Who cares? What's interesting is that this did occur on very high volume. So the volume matched the volume that we had on the first day of this rally. So we've been in a sequence for about 1, 2, 3, 4, 5, 6, 7 days of rally mode. This is our first high volume, what could end up being dubbed as a distribution day. So we don't really want to see just like distribution at these highs, because then that could mean, hey, we might just be slipping right over. But it is good that we're taking a breather here. That way some of these moving averages can catch up. Look at where the 20-day moving average is. This pink line over here. It's all the way down at 44.06, so it's about 120 points lower. So yeah, not bad that we're getting a consolidation day. And I noticed based on everything I was looking at, this is why I don't want to say I took the day off of trading. I did place one trade. But I went into the day like, I was like, okay, today I'm really going to take it easy. There's probably nothing out there for me today. And I think I was right, because all we really got was like a choppy mess and like somewhat lower price action. But yeah, I was just noticing when I looked at like CNN Fear and Greed Index, I was looking at my dark pool data, like all these different factors, put to call ratios. And then just looking at the trend and where we are, I'm like, is this really where I want to like take on more risk? Be like looking for new trades? Like, no, not really. So it was actually great for me. I just got off the desk. I was doing other things. I'm working on a data science project. We have a couple people in the Pristine Capital Trading Group that are working on data science projects. So it's pretty cool. And then my market signal flipped from a +3 to a +1. So that's another reason why, I am approaching this slower now, because hey, my model, I want to stick with it. I want to make sure I'm following it. So yeah, this isn't an environment where, I was going to be like searching, like where's the next best trade, that sort of thing. So yeah, we'll see what happens next week. One is pretty much like a choppy tape. So yeah, we'll see what happens. Now let's take a look at my trades for today. We will take a look at my only trade for today. Let's see. Okay, trades for today. I entered a lotto trade on Hut Mining. I already have, this is one of my core positions. I entered the November 19th 15 strike calls on Hut Mining. Let's take a look at it. So this is a crypto asset. And for me, I'm very bullish on crypto. I think these will end up resolving, just fine to the upside in due time. So Hut Mining, it lost the 5-day EMA, lost the 10-day EMA, and now the next level of support is the 20-day. Pullbacks to the 20-day moving average are so normal. You know, it's nothing to be afraid of. You know, it's okay. It's just the facts of life. Every asset pulls back to the 20-day. What I notice here is this pullback every day is occurring on lower and lower volume. So yeah, there's some players that are exiting their hut, you know, especially with the volatility in crypto. You know, that's okay. But basically my trade is, hey, this 15 strike, I see it's super active. I see the price fluctuates a lot. I just bought the 15 strike. That way, hey, if we end up getting a move back to, let's say, like 1284, you know, I can take that off for a nice winner. But that was all I did. And then the other thing is I had a diagonal call spread in Alibaba. And what I did for this trade was I entered the calls moved in my favor, and then I sold the call against my existing position. So I was short the 185 calls for Alibaba, and they just expired today. So I was short the October 22nd ones. Let's take a look at Alibaba. So basically I was able to reduce the cost basis of my calls, and yeah, I was able to hang on to them. So basically it worked out very well. Alibaba looks like it's in, you know, really nice trend here. We're above all these key moving averages, and I entered the diagonal, entered the short leg of my trade once we took out this VPOC here. I had a feeling, hey, we're probably gonna hit that VPOC. I doubt we're just gonna tear through it. We might have some sellers that become active here, and it looks like that's what's happening. We're essentially getting sellers that are getting relieved out of their positions. Now we can clearly see here, you know, those shares are changing hands to new buyers. So yeah, liking the action in Alibaba, and who knows, maybe if we get another move to the upside, I'll sell another call against my existing position and reduce my cost basis even more. All right, let's jump over to our VIGTech options races. Dun-dun-dun. Yeah, and thanks so much for everybody watching these videos. I really appreciate you. All right, so we have Tesla in lead. Oh my gosh, it's Tesla, Amazon, SPY. Let's see if there's any new names here. Yeah, this RY, I was looking at that earlier. Definitely a new name. So we can check that out. Alibaba, Shopify is even coming in the mix. All right, let's take a look. Go to our matrix here. Let's check out what we got. So Tesla. Oh my God, everyone's loading the boat on the 900 strike calls. Let's see where Tesla closed. 925. 905. They're getting bold. Bulltastic. Wow, we actually closed above 900. That was a key gamma level, and we just tore right through it. On the weekly chart, man, does Tesla look good or what? It's literally trading at the highs. So it just goes to show, when an asset goes on a tear like this, 100 to 900 over the course of like a year, it usually does have a multi-month consolidation or pullback. And a lot of people give up on the asset because when the asset is pulling back, everyone's going to suddenly have a bearish narrative. It's going to be like they have to basically tell stories about why the company is worse, but it's really just the price moving. So that's kind of like the fallacy of it all. And it's like, if you were a long-term Tesla holder and you just held, you know, you're like, oh, okay, you know, we had a dip, and yeah, here we are, we're back again. So yeah, really interesting. Tesla saw that bullish flow. Let's see what we got for Apple. Wow, calls coming in for Apple. That's interesting. The 140 strike, 130 strike, 149. These are pretty short dated as well. Let's see what's going on with Apple. See, yeah, they're getting bulled up likely into the earnings report. Wow, so Apple did not look bad at all. Wow, Apple opened up on the lows and just rallied today. That's very interesting. Wow, okay. So you have relative volume 0.77. They report earnings October 28th. So yeah, I'm sure there were players that, like, they were taking advantage of the weakness. Like, all right, you know, just get long Apple, get long Apple. But yeah, really nice sequence here. And you can see Apple's trending pretty nicely here. Pays a dividend. Dividend's only 0.59%, nothing too crazy. All right, that is Apple. Baba, nice call flow. Already went through that one. Shopify, pretty mixed here. We got some calls and puts. So I'd say leaning more on the call side. AMD, even more calls, team. So November, we've been talking about this stock for the past 3 days, noting the options flow in here. And look at this. These are, like, I would say more short dated than what we've been seeing the past couple days. Yeah, January 2022, 115 strikes, 120 strikes. Yeah, it seems like the 115 and 120 strikes are pretty active. Let's see where we're trading right now. And this will be our last one because, you know, it's... Whoa! Oh, this is the weekly chart. Oh, I'm sorry. Yeah, even for Apple, that was the weekly chart. Probably better to look at the weekly anyway, but let's take a look at Apple. Okay, so Apple didn't really have a good day. But kind of interesting to put it in perspective that it's like, while it didn't have a good day, it did have a good week. So, pretty interesting. Yeah, let's go back to AMD. Sorry about that. Okay, AMD up 0.41%. So yeah, we had the NASDAQ was weak. It was down almost 1%. And AMD was up 0.41%. So what's going to happen if we get some strength? You know, I think it's a high likelihood that we push past that 120 strike. So yeah, looking very good. With that being said, that about does it for our market recap video. I'm signing off for the week. If you're interested in joining the Pristine Capital trading community, really the goal of our community is we're trying to work together to compound capital. If you're interested, feel free to go to pristinecapital.net. Feel free to send me an email. You know, you can use my contact form on my website, whatever. You know, just feel free to get in touch. Appreciate you all for watching this video. I will see you all on Monday.